you'll see a change.
This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices sharply higher this morning. This appears to be directly due to the retail sales report that came in much stronger than anticipated, coming in up 0.7%. The guess was up 0.4%. We continue to believe that the main trend is higher and that the Fed will be very slow to raise interest rates. So with a very low global interest rate market, I think we can see more of the same as far as stock index futures is concerned. Look for higher prices through the balance of this year and higher prices well into next year. Over in the currencies, the dollar was higher in the overnight trade, but the gains continued with the retail sales numbers coming in quite a bit better than anticipated. Of course, this put pressure on most other currencies, the foreign currencies very quickly falling with the better than expected U.S. retail sales report. Also, a recent poll indicating that it is more likely that the European Central Bank in the first quarter of next year will ramp up their easing, possibly buying sovereign debt in a renewed quantitative easing program there. So the euro currency is likely to come under some additional pressure. Also, we had Norway's central bank lowering interest rates in a surprise move. Now, normally, we would not pay that much attention to what some of the central banks are doing at some of the smaller countries. However, this is very significant in that any time a central bank in a certain region changes interest rate policies, it often affects other policies from central banks geographically located very close. So this puts pressure on the ECB to add more stimulus to their economy, which is another bearish factor for the euro currency. Seeing some pressure in the yen, the feeling continues, remains that the Bank of Japan will be adding more stimulus in the first quarter of next year. So look for lower in the yen from here. Similar story for the Reserve Bank of Australia. More accommodation likely in the first quarter of next year from the RBA, so that should continue to put some pressure on the Australian dollar. And interest rate markets, seeing some pressure developing with the retail sales coming in quite a bit better than anticipated. However, the bonds holding up relatively well, just a little bit lower. In fact, we would expect them to be a lot more lower with the retail sales as strong as it was, not to mention all of the supply this week. Today we have a 30-year bond auction with $13 billion to be sold today by the Treasury. So overall, Treasury is holding up very well. Longer term, still thinking higher in that complex, especially for the 30-year bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.